Eric Muathe, Muathe.com. It is November 11th, 2016. Now I'm recording this also to be part of my US market weekend analysis, but I want to send it to subscribers very early on by the end of, let's call it mid-Friday. So I'm doing this earlier than usual because I'd like subscribers to consider some of what I'm about to say in terms of the current market analysis. Now, the market is not going down. You'd think the market will pull back significantly. The Dow right now is down only about 20 points. Gold is down about 2%, 3%. VIX is up about 6%, and crude oil is down about 3%. Now let's take a look at my analysis, which might explain why the market is not dropping. You might think it might drop after a huge week, but there's a technical reason why markets are going to close at the highs of the week or very close to the highs of the week. So let's take a look at the charts. Oh, and I must say, subscribers, be on the lookout for a potential email with ideas as I research any ideas going into the new week. Just be on the lookout. I could be sending that to you. Otherwise, be on the lookout for part 2 of this analysis, which is going to be sent to you during the week, during the weekend, most likely as usual on Sunday morning as we prepare for the new week. Should have some ideas there, maybe some ETFs and some stock picks. Let's take a look at those charts. Let's begin with the weekly chart for the Nasdaq as an example. Because the Nasdaq is moving its weekly RSI back above 50 this week, chances are it's gonna close at the top end of its range for the week. That's just generally what happens. I know it's Friday. We have about half a session to go, about 3 hours to go before the market close, 3.5 hours, something like that. Chances are the markets are gonna close as close to the end, to the top range of this week. Why? Because that's generally what happens when the weekly RSI is moving above 50, and also the inverse is true. For example, take a look at last week when the market had this relatively big drop. We closed just about at the range or the lows of the range for the week. So I would expect something similar to this, which might suggest that Friday is not necessarily going to be a big down day for markets, is what I'm trying to say. So anybody expecting a huge drop, probably not going to happen. Take a look at the S&P 500. On the weekly, also pushing above 50, expected to close towards the top range of the week. And right now it's close to that top range, which is consistent with what I would be expecting as the market is moving above RSI 50. And the biggest mover this week in terms of percentage terms, I believe, is the Dow. Dow is up about 5%, and the Dow, because it's moving above RSI 50, chances are it's going to close towards the top range of this week's gains. So again, the reason why I'm sending this to subscribers early before the close of Friday is do not expect the market to be falling down just because it's been up a lot. Because of the movement above 50, it's gonna close at the highs of the week as best as it can. Now, my intention in this video pretty much is to show you levels that we can use to determine whether we should be long or whether we should be short, and there are numbers that we cannot ignore. For example, right now we are looking at the Dow pushing above the previous all-time weekly closing high. So quite frankly, as long as the Dow is holding above that threshold, and that number is at 18,576.47, you have to respect the potential for upside. I know it sounds fantastic, but you just have to respect it. As long as the Dow is holding above that level, we cannot be arrogant as to assume the market has one option, which is to go down. Okay? Now, I remember talking to subscribers this week and say, can you imagine it took all these months here, 1, 2, 3, almost 3.5 months to drop from here to here. But it's taken all 4 days to move from here to here. Man, that's absolutely fantastic. That's a fantastic move. I mean, you have to respect markets to surprise and to do all sorts of weird things. So that has been, after all this slow drip pullback, we get this amazing spike. But anyway, that's besides the point. So anything above 18,576.47 is bullish for the market. Now, I want to show you why right now we are looking at potential for markets to come back and show resistance. But this is going to be a play into the following week. It's not a play for right now. If you really think the market is rolling over, this is a fake move, and it could very well be a fake move. And I kind of prescribe to that idea that it's a fake move. But as long as the market is above 18,576 on the Dow, 0.47, I don't want to fight this trend. But even though I can show you why I think eventually market pulls back from current levels, and anybody who wants to short the market can start building on a position short, because I'll show you why I suspect week to week the next major trend for the market is going to be lower, but also we need to see evidence of that by the market moving below 18,756. Why do I say the market could pull back? Because what the Dow is doing right now is coming back. This is three-year weekly chart. What the Dow is doing is coming back to this line. Now this line connects previous highs going back to 2013. You can see from here connecting the highs there, and recently where the Dow stalled. Now when it stalled recently, we hit that level twice, here and here, for these highs, before we got the recent pullback that has just been absolutely blown past. So pretty much we are coming back to test this level. I speculate this is where the Dow stalls. More so because this level happens to be at about 61.8. So I would be looking for a reversal here. Also, there's another way of looking at this, and it is a simple line that comes back to the recent break. So the break of recent highs, so this break here is what is being tested with the current move. We draw a line from there, and you can see the market is coming back to test that break point. If we turn down in the new week around here, that's going to be a sell signal worth taking an action on, which is taking some short position on the market. So anybody wanting to short the market can use this last couple of hours on Friday and probably even into Monday to build on a position that could be shorting the market or instruments that generally go along the market. In other words, based on these weekly charts, based on these two lines, you can start looking for reasons to start building positions short, is what I'm saying. Another reason why I suspect that around here we pull back is the daily for the S&P 500. It's a simple analysis here. All you have to do is take the top side of the daily RSI, extend it out. Now we've been talking about this the last 2 days or so. We hit that, we've stalled. So that in itself, as long as S&P 500 cannot move above this line, I would assume that the next meaningful direction is higher. But the big reaction lower will have to be in the new week, not this week. If you take a look at the recent break of the highs, so off these highs here, RSI broke down there. So that break was good enough to pull the market lower. We draw a line from there, something like that, and you can see again this last 2 days S&P 500 has pretty much stalled on this line, suggesting that yes, given the resistance, as long as the S&P 500 fails to move above this line, we are expecting a pullback. I hope that makes sense. So as long as this is confirmed as resistance, we expect a pullback, but we always have to be careful not to be arrogant, because the market has an option to break out above those two lines. If it breaks out, of course, we see higher prices. Now keep in mind, we haven't seen it move above those two lines, so we have to conclude that at the end of the day, this is good enough resistance, and that we can start speculating that the next meaningful direction for markets day to day, and then given the Dow's weekly chart, that week to week and day to day, we might be potentially rolling over. Now, as I've been saying throughout this video and the beginning of the video, the Dow just turned positive. The Dow is now up 14 points. Remember, I'm speculating that the markets are going to close at the highs for the week, just because that's what happens when you move the RSI above 50 on any time frame. On this time frame, it's the weekly chart, so the weekly price action is going to end towards the tail end of the action for the week. If we take a look at the S&P 500 quickly here, the level we were watching all week seems to be coming into play. It's this recent break off the highs, recent highs. So this RSI broke down here off the highs right there. We drew a line, and we've been expecting the market to struggle around here in terms of sentiment. So we see that there was resistance here for the highs there, and now resistance confirmed during this messy period here. Generally, that's good enough resistance. So the S&P 500 short term could close around here, but the hourly is suggesting that it struggles to move above current highs. You take a look also at the recent 30-minute chart. You can draw it like that. This is where we came off this recent highs short term, and we touched this level here for those highs, and now this congestion here has been confirmed as sentiment resistance. We've pulled back off the highs here. So yes, a lot of work if the S&P 500 wants to move higher, and I can also show you why the market doesn't close lower for as far as I'm concerned, because of this line here, this line. And I know I'm going into time confusing aspect, but here there was a slight breakout, which is this movement. Market's been higher since, so what we can do is extend this line, and you can see here, middle of the day on Friday, the market is coming back and nicely showing support on the line here. So as long as it is bouncing on this backtest line, I would expect the markets to close favorably into the close of Friday. Now, I didn't want to make this video too long, so I want to conclude this video by stating something that I talked about here, and it is a caution. I talked about this, I believe, on Wednesday, maybe Thursday, but Wednesday after the close. And it is this idea that we have to be very careful here. We cannot be arrogant in assuming we know which way the market is going to go, because S&P 500 is so close to breaking out on the monthly chart above 2173.60, which is its current all-time monthly closing high. So if you're expecting the market to go higher, you got to understand that if the S&P 500 moves above 2173.60, that's a legitimate breakout that could actually move prices higher. If you're bearish, you'd want to make sure that the S&P 500 does not break out above this price range, and also to be on the safe side, you'd rather the S&P 500 was down for the month to confirm that it is not putting energy to the upside. A positive month just means the monthly charts are putting pressure to the upside. If the S&P 500 turns negative for the month, then at least you know that the monthly pressure is back to being negative. So watch the monthly price levels here. If the S&P 500 is positive, net markets are okay. So you don't want to just assume that the next swing trade is lower based on the fact that the daily chart is showing resistance. The market could eventually break out on the daily chart. So you never really know. You cannot be arrogant. But if you want to be on the safe side, you have to insist that the S&P 500 is not breaking out if you are bearish. Because if it's above 2173, this market could easily go to trade above 2500 or 3000. Who knows? Just be aware, a breakout can be deadly. And as far as the Nasdaq is concerned, let me share with you the potential breakout. It's only potential because it hasn't broken out, but the Nasdaq could. It's very close to breaking out if it chooses to. The level we have to watch out, if the Nasdaq moves above the recent all-time monthly closing high at 5,312.00, one has to respect the potential for upside. If it doesn't break out, then it's not that bullish, but a breakout could actually lead to another spike in market. So let's just watch this number. Below this, then it's not as strong, and the more it drifts away from this number, the more the breakout attempt failed, because you can even see here at the highs for the month so far, it did not get close to 5312. So it's kind of like a failed breakout attempt for the Nasdaq, but not yet over, because it could break out at some point. If it breaks out about 5312, be careful, because markets could actually be seeking maybe higher prices. Because keep in mind, let's just say the Nasdaq eventually wants to test 6,000. It's never traded. Let's just say the market wants to go to 6,000. Of course, before it does that, it has to clear the recent resistance levels. That's why you have to be careful with a breakout, because you never know. The Nasdaq could be wanting to go and trade as high as 8,000. Who knows, right? So whenever you see a breakout, you have to be aware it just opens the possibility for higher prices. Now, I hope you can keep that in mind. Oh, and by the way, I failed to mention the Nasdaq Daily, but let me mention it here. And the Nasdaq Daily also is still showing resistance and has a lot of work to do if it's gonna move higher. The Nasdaq right here at the highs of the week hit this line, and as you can see, we've been unable to move above that. So what I would say here, it's very simple line. As long as it is below this blue line here and showing resistance, then the suggestion is that the next swing trade is lower. Now, of course, if the market can move above that line, then it changes the equation, and now we start expecting higher prices. So for now, looks like resistance. And the more it shows resistance on this line, the more it confirms resistance here. At some point, we're going to have a huge down day, because if this is confirmed as resistance and the market moves below RSI 50, expect a big down day whenever that movement below 50 takes place on the daily RSI. I would like to conclude this analysis by taking a look at the S&P 500, because I think it gives us a good level to watch. Now, number one, we can see that this bounce this week came as a result of support on this line connecting previous RSI lows. It looks very simple now on hindsight, but this is what we were watching at the tail end of last week. Market has responded to that with a huge spike. Okay, so we got that. But now I want to show you why I think around here S&P 500 runs into problems, and I'll give you a number to watch. If you take a look at the highs, just like we did for the Nasdaq weekly, if you extend this line out, you can see that we broke below this line here, the blue line, for the highs there. Market is coming back to backtest that line. So I think if we turn down in the new week, that's going to be confirmation of resistance on this line. Okay, that's one reason why I think the market might stall around here. Let me give you another reason, and it is the line from the RSI break off this level here. So this RSI break brought the market lower. So here, off the highs there. And this was resistance for a while. Plus, if we get confirmation of resistance on this line or on this line as we begin the new week, if we get failure to move above 2184 and then also resistance on these two lines, then that is also confirmation that the next meaningful direction is lower. Otherwise, a breakout above 2184.05 would definitely be bullish. So how do we conclude this, all this confusing mess? I think one can start building a position on the short side based on this number. If the S&P 500 has failed to break out, if it confirms resistance, and also going back to that daily chart, you can take the view that right now the market is pretty much confirming resistance on this line and the previous recent break line. So using this chart, we can say that the Dow eventually fails to break out on its weekly, and that the Dow eventually fails to break out on its monthly chart. That's my conclusion. Otherwise, that's how I would look at the market. Potential for a pullback is now in store, but be careful if the markets break out on the Nasdaq and the S&P 500, then they have joined the Dow, and that will be confirmation that actually the market is very strong. Another way of saying this, if the S&P 500 eventually breaks out above these two lines, then we can play the market from a bullish standpoint. Right now, the conclusion from this video is don't expect a market sell-off on Friday, but as we begin the new week, expect the market to start looking lower. Eric Muadho with Muadho.com. Again, be on the lookout for part 2 of this weekend's market analysis video after I do my research, and I will send it to you most likely Sunday morning. Eric Muadho with Muadho.com. As always, good luck, peace, and blessings. And before I go, let's take a look at where markets are trading right now. With about 3 hours to go, November 11th, we are looking at the markets just down about 10 points as far as the Dow is concerned. Again, the reason being, as I've been saying, chances of a sell-off on Friday are very low. Why? Because the Dow is moving its weekly RSI above 50. Expect the Dow to close at the top range of its weekly action, which is around here, maybe even higher. Peace and blessings. I see.